the board of the Steamship Authority and members of the Port Council. I'd like to thank everyone for attending. I'd also like to inform everyone that Steve Batty of All Media Productions is making a video and audio recording of today's meeting, which is in public session. It's for the Martha's Vineyard Community Television, MVTV. I'd also like to inform everyone that Sean Driscoll, the Authority's Communications Director, is making an audio and video recording of today's meeting. If there's anyone else making an audio recording of today's meeting, please identify yourself by pressing the raise your hand icon, or if you're joining by phone, pressing *9 on the keypad. And when you're recognized by Sean, please state your name for the record. Thank you. Sean?
Got just Mr. Salzberg, I think.
Hi, Rich from the MV Times.
Thank you.
Is that it?
That is it.
Okay. Reading another statement in response to Governor Baker's executive orders concerning the necessity to conduct public meetings in line with social distancing guidelines during this current state of emergency involving COVID-19 pandemic. All of the board members who are participating remotely in today's meeting because their physical attendance today would be unreasonably difficult. All board members are participating in the meeting via Zoom video conferencing app. All members will be clearly audible to each other. And because of the remote participation in the meeting, any and all votes taken by the members today shall be by roll call vote. Now, as everyone knows, I believe the purpose of this meeting is to review the audit of the Steamship Authority's 2019 financial results. I'm delighted that we have our auditors present, and I'll turn it over to them for their presentation. Thank you.
Very good, thank you. For those who I've not had the privilege to meet, my name is Dan Barnett. I'm a partner with RSM in Boston. Tanya Coker-Ferguson is joining me today. She is the engagement manager responsible for overseeing the audit of the financial statements. And I'm also joined by Matt Healy from RSM. He is with our consulting practice, our risk advisory practice, and his focus in serving the audit is in looking at and testing the system-related controls that are part and parcel of the audit process. So Tanya, if you could share your screen, we'll kick things off with the proposal and with the presentation.
Okay. Does everybody see that?
Mm-hmm.
All right.
Yeah, Tanya, maybe if you could shrink it down to 100%.
Oh, I'm sorry. Oops. Is that good now?
Yeah, that's good.
Okay. Okay.
So the purpose of our meeting today is to share with you the status of the audit and the results of the audit process for the year ended December 31st, 2019. So we did perform the audit in accordance with general accepted auditing standards, which are the standards that we're required to follow as a profession. But in addition, we performed the audit in accordance with government auditing standards. Government auditing standards are additional standards issued by the Comptroller General of the United States that require greater accountability for us as auditors, as well as you as grant recipients for the receipt and expenditure of taxpayer dollars. So it just requires us to do everything we would have to do under the professional standards, but then enhances the requirements to be more specific around the types of training that people need to have, the types of due diligence that's required as part of the audit process, and so forth. Our opinion on the financial statements is unmodified, which is to say that the financial statements are fairly stated in all material respects in accordance with generally accepted accounting principles. Our opinion on that, on the financial statements is dated June 30 of 2020. In addition to auditing the financial statements, every few years, the authority has qualified for what's called a single audit or a uniform grant guidance audit when you receive and expend federal dollars in excess of $750,000. So this year, a single audit was required. As a result of that, we do additional testing around the grant itself to make sure that the dollars were spent consistent with the federal government's expectation of what those dollars were awarded for. So not only do we look at the compliance with the grant requirements, but we also look at internal controls related to the expenditure of those grant dollars. Tanya? And I'm sorry, our opinion relative to the testing of the federal grants was also unmodified. So as I mentioned, we did perform the audit in accordance with the 2 different sets of auditing standards. Those can be understood in more detail looking at the arrangement letter, which was dated February 7th of 2020. In that document, it sort of spells out in more detail what our requirements are as part of the audit process, as well as what the requirements are for management. And we'll circle back to that in just a second. At the same time that we issued the arrangement letter, we issued a separate communication, which was focused on where we thought that the risks would be as part of the audit. We're here to tell you that there was nothing that came up as part of the audit process that was unexpected, other than the impacts of COVID, which will, I think, sort of caught everybody flat-footed, obviously, and we'll speak to that a little bit more detail shortly. And it's important to note that while we do test internal controls for the purposes of understanding the design and implementation, so are the internal controls designed effectively, and are they operating as designed? We do that, and we gain that understanding for the purpose of understanding the scope and designing our testing. It's important to note, however, that that's not the same as testing of internal controls as you might understand it to be in the context of a publicly traded company. So we do not issue a formal opinion on the operating effectiveness of internal controls. So that's an important distinction to make sure that I got across here. Tanya? So when we do an audit, we test every account. There are, however, some places where we have to dig deeper. It might be the nature of the client, that there's something particular about the way they do business that's a higher risk. It may be an accounting estimate where every number on the financial statements is not necessarily what its face value is. I mean, cash is cash. So when we go to cash, that balance is going to tie and reconcile to the bank. So that there's no issue with an account like cash. But with receivables, there's a portion of those receivables that is likely not going to be collected because a company goes out of business or whatever the case might be. So management develops estimates to appropriately present the information in the financial statements at its expected realizable value. So that's an area that we consider an area of risk and where we would focus more time. There may be non-routine or complex transactions, one-off deals, implementations of new accounting standards, again, areas where we would spend more time. So as we get into the next slide, I'm going to ask first Matt to talk a little bit about the things that we focus on relative to testing of the IT general computer controls, and then turn it over to Tanya to just walk through some of those areas of audit focus for the current year.
Sure thing. Thanks, Dan. For our IT procedures around the testing, we're usually working with Tanya, Dan, and team to identify the in-scope applications, and then we test what's referred to as IT general controls over those in-scope applications, which typically consists of things like change management, access to programs and security, or things like operations, backups, job processing, things like that. And so we test a sample of each of those controls to help determine the operating effectiveness for those systems.
Yeah, and I think the important thing to understand as it relates to the IT general computer controls, I translate that back to the movie Office Space. I'm not sure if anybody has seen it, but the premise of that movie is that somebody from the finance team goes in to the underlying computer programming and rounds off the pennies on the payroll and then diverts those pennies to a separate account. So that's actually based on a real fraud that occurred back in the 1980s. And if we as auditors are testing, we literally could test every single payroll transaction and we would never see that. So what testing the ID General Computer Controls does is it gives us assurance that the integrity of that system remains intact, so that if somebody were to enter the system and change underlying coding or programming, that somebody else would get notified that that's in fact happened. It makes sure that only the people who are supposed to have access to that type of programming, only the right people are allowed to have it, and that there's processes in place to make sure that that is not only protected, but it's monitored. It's also things like making sure that there's appropriate backup and recovery procedures in place. So I remember a few years ago when the office was still back on the pier, that the water main was running through the ceiling in the server room, which, as you can imagine, if there was a burst pipe in that, all of your data systems would have been torched. And as a result, the entire data room was reconfigured and moved so that it was not in that space. So those are the things that we focus on to ensure the integrity of the data that as it passes through the system. So Tanya, if you want to pick up on the other side of that in terms of the other things that we focus on.
Right. So we also focus on, for financial reporting, the assessment of the disclosures. So making sure that all the disclosures within the notes to the financial statements are complete and in accordance with the various accounting standards. As Dan mentioned, accounts receivable is an area where we focus on to ensure that any estimated uncollectibles are properly assessed and recorded. We also ensure that revenue is properly recognized. We review the reporting of residual net position balances, and this would include the calculation of the net assets for what's it called? Capital assets, net of related debt. We also take a look at your capital assets, which is extensive, and with all the construction going on, we pay attention to additions, to disposals, if any, and the calculation of depreciation, which is also an estimate. We review your accounts payable and accrued expenses. With this area, it's usually a risk of cutoff to ensure that any liabilities that might have come in and expenses you would have incurred were actually captured within the fiscal year. We reviewed the self-insured health plan obligations to make sure those were reasonably stated. We send out letters to legal counsel and assess any contingencies that may arise from those confirmations. We test for management override of control. So this usually includes testing journal entries to make sure that any journal entries that were manually entered into the system had adequate supporting documentation and sign off. As Dan mentioned, we did a single audit this year over the Port Security Grants Program and tested compliance with the federal regulations on that. We review for subsequent events, which kind of goes hand in hand with the next one, which was COVID for the most part this year, at least was the most significant this year.
The following slide just lays out all of the things that we're required to share with you as part of the required communications under professional standards. So Tanya, if you page down, we'll walk through each of these in a little bit more detail. So the first couple we've really already addressed as part of the opening statement. The third item here, so under generally accepted accounting principles, there are different ways that certain standards can be implemented. So for example, in accounting for fixed assets, and particularly infrastructure assets, there are two ways that that those can be reported. One would be to report those assets at cost net of accumulated depreciation. The other would be to carry those assets on the books at their value at the time that they were constructed, and then carried at that value as long as the operating condition can be maintained at whatever level was measured at the time that the assets were put on the books. So I'll say it a simple way. If you build a roadway is an infrastructure asset. You can either put it on the books at its cost and then depreciate it over time, or you can put the asset on the books at its cost and continue to carry it at that cost. But then management has to make an assertion that says that this road will always be maintained at 85% of perfect condition. And as long as you continue to pave and maintain the road in normal fashion and maintain an 85% quality, then you never have to change the carrying value of that asset. However, if the asset deteriorates, then you need to effectively take an impairment charge. So that's the only scenario under governmental GAAP applied to the authority where there would be an option for preferable accounting practice. Management opts for reporting at cost net of accumulated depreciation, which is how 99.5% of the rest of the world accounts for their fixed assets. So in the current year, this was really kind of a mess this year. There were a couple of fairly significant accounting standards that had to be implemented this year, and then COVID-19 hit. So one of those standards is the reporting of fiduciary activities. So right now, the pension plan for the authority is reported in the footnotes, but the financials themselves are not reported as part and parcel of the required financial statements. The new accounting standard would require those to be reported for the defined benefit plan. However, when the GASB issued this standard, they didn't vet it fully. So in addition to the defined benefit plan, the authority also has a defined contribution plan. And under the GASB standard, as it was written, it was going to require the authority to incorporate not only the defined benefit plan, but also the defined contribution plan as additional reporting units in the financial statements. The GASB did not intend that effect. So they rushed into emergency session to try to clear a new standard to eliminate that requirement so that only the defined benefit plan is what would be required for reporting. COVID-19 came through, and as a result, all of the work that management did to get ready to implement the fiduciary reporting, everything got deferred. So all pending GASB standards were deferred 12 to 18 months of COVID-19. So management's well positioned to implement this next year at the deferred implementation date. But because of all of the back and forth in terms of, does it have to be implemented? Does it have to include both? How do we get the information? It was a lot of work with very little return on the investment of time, unfortunately. By no fault of the authority, it literally is a GASB problem. So significant or unusual transactions in the current year, there really wasn't anything that we considered to be extraordinary or out of the ordinary, nor anything for which there is not appropriate accounting guidance available. Tanya did talk a little bit about the management judgments and accounting estimates that are included in the financial statements. So it's important to understand that a management estimate means that management develops some sort of allowance or valuation to report numbers appropriately on their financial statements. So management, by virtue of the fact that they make these estimates, has the ability to manipulate what the numbers might look like on the financial statements by moving. An estimate is never a single number. It's usually a range of estimates. So what we look at when we look at management's estimates, first and foremost, does it make sense? Is it appropriate? Is it consistent with what we see from an industry perspective? But then more importantly, is it consistent? So if management has always picked the middle of the range, and all of a sudden this year they're way up on the high end or way up on the low end, that's a major red flag. And it requires us to go in and challenge, why are you doing this? Is there a real factor that's driving you to be, up the ladder or down the ladder? Or are you trying to hit a debt covenant or otherwise get to a bottom line that's been promised to the board or something to that effect? So it's important to note that that's the way we test, and we did not identify anything that was out of the ordinary or that appeared to be inappropriate in management's development of estimates. So one of the things that Tanya had alluded to previously is the question of going concern. So as auditors, we are required to assess whether or not we believe the organization has the ability to continue a going concern for 12 months from the date that we issue our opinion. In normal circumstances, we would never have any concern with the authority. There's always, the reserves are always appropriate based on the statute. There's always been sufficient resources available to deal with or address emergencies. Unfortunately, the way the organization is structured, you can't have any more reserves than are statutorily allowed. So, that provides some cushion, but not enough cushion to handle something like COVID-19. So we required management to go through and make an assessment as to whether or not they believe they have the ability to continue as a going concern for the next 12 months. And based on their analysis and our audit of that analysis, we conclude that there are no issues and no concerns relative to the abilities, the authority's ability to continue as a going concern for the next 12 months. Based primarily on not only the federal funding, but also just inherently in the structure of how the organization was created. There are mechanisms that provide an ongoing basis of funding. And I understand that the governor just passed or signed the extension of the Budget Act, I want to say last Friday, which eliminated the portion of that, or I shouldn't say eliminated, suspended the portion of that provision in the Enabling Act that as long as the deficits are created by COVID-19 related expenses, that those charges will be covered by the Treasury and not be charged back to the related communities. So again, based on everything that we had audited, we were pretty comfortable that there's no issue with continuing as a going concern. So Tanya, if you want to handle the next couple of pages where we talk about the audit adjustments and then past audit adjustments.
Right. So the audit adjustment that we had was related to the amortization of the deferred inflows as it relates to the OPEB plan. So once the deferred inflows have been calculated, and we do adjust them every year, they're supposed to be amortized over a certain period. And that amortization expense was not recorded prior to us receiving the unadjusted trial balance. And so we recorded this entry to recognize that.
Yeah, so I'll translate that a little bit into English because it's a lot of accountants in there. So the calculation of the liability for other post-employment benefits, it's an actuarial calculation that takes into account a number of different factors. And some of those factors, it amortizes gains and losses and discounts and changes in estimates and so forth. It amortizes those over a period of years, as opposed to having everything be a single year impact. So it's intended to smooth out adjustments to the OPEB liability over time. So all we're saying is that the management had not yet performed the calculation when we received the trial balance. So once they perform the calculation, this is just an accounting entry to true up the liability for other post-employment benefits.
Much better. Okay. this slide shows the uncorrected misstatements. So these are misstatements that we found, and what this slide actually does is adjust what your balances are currently to reflect the effect if we had properly, well, not properly, if we had recorded all of the entries that we found. And the last 5 are actually reversals of past entries from the previous year. So that the net effect actually is depicted here. So the first entry had to do with the impact of a prior year error that we that management actually noted this year, and this had to do with the calculation of the liabilities that Dan just referred to. So last year, the difference for one of those calculations is typically done, fiscal year 17 versus fiscal year 18. And, okay,
Yeah, so the bottom line is it was
sorry.
a timing issue in terms of when Tanya's get the twin boys. At like, what, 6-year-old twin boys. So that's a little bit of background there.
We understand.
So so this entry is it's basically a timing issue in terms of when things were recognized. They should have been recognized last year. They weren't, so it was recognized this year to catch it up. At the end of the day, the sum total of all of these, again, we're looking at year-over-year impact of how you amortize your bond premiums and discounts. It's supposed to be effective interest method as opposed to straight line. The other things on here are recognizing the insurance receivable asset as of 12/31/18. Again, it was a cutoff issue at the end of 12/31/18. Let's see, contributions made after the measurement date. That's another one of those accounting, actuarial type issues. So the bottom line is these are all matters that were identified as part of the audit process that would have resulted in audit adjustments. But the conclusion that management made is if we record all of these, nobody's really going to come to a different conclusion about the organization. So we elect not to record them. So we take a look and we try to conclude, first of all, is it quantitatively material? So does it rise to the level that it would result in a material error to the financial statements just based on pure numbers? And the answer is absolutely not. Nothing here is even remotely close to material. But then secondly, is it qualitatively material? So if management booked these, would it change a debt covenant? Would it change, some sort of bonus calculation that, gets paid based on bottom line net income or anything like that? So there's absolutely no qualitative factors in our mind that would require that any of these be recorded either. And what you'll notice is that a lot of these are carryover. So it's a reversing effect every year. So I expect when we meet with you next year, some of these will show reversing effect for the current year versus next year. So it's pretty standard, but nothing here that I think should be of any concern or significance to the board.
Thanks, Dan.
I heard the boys running around. So I forget.
Not like I didn't warn them.
So there are certain other things in these financial statements that they're marked as unaudited. So the management's discussion and analysis at the front of the financial statements, the supplemental schedules around the pension and OPEB disclosures that are in the back of the financial statements, they're all marked unaudited. It's sort of a misnomer to say that. We're not going in and specifically, doing detailed testing behind the numbers that are in those schedules. but all of those numbers are in the financial statements. So for all intents and purposes, we are auditing them part and parcel of our audit product. The thing is with the supplemental information is a lot of that includes 10-year trends. So yeah, we audited that information over the last 9 years, but we didn't audit. But this year we only audited the current year information. We didn't go back and re-audit all of the information for the last 9 years that we've already issued an opinion on. So it's a little bit of a misnomer to call it unaudited, but I just wanted to make sure that you understand resides in these financial statements. There were no situations during the audit process this year where we had any disagreements with management. We had a lot of discussions, a ton of discussions around the fiduciary activities and implementing that standard and you know what was going on with the GASB, but nothing at any point that resulted in any sort of disagreement with management. We're also not aware of any circumstances where management asked us a question, we gave them an answer, they didn't like the answer, so they called somebody else to try to get a different answer. That would be a form of opinion stopping that we would be required to share with you, and there was absolutely none. As I talked about, I'm sorry, this one's a little different. So in the original calculation that was done for the pension liability, the actuary that was employed by the authority used a standard mortality table. So an industry standard, an industry agnostic mortality table. And there is a new mortality table that is specific to public sector entities. So when we told the authority that they used the wrong table and our actuaries looked at the calculation, there was a big enough difference. It was approximately $2 million that we were not comfortable using the generic table. So management did go back to their actuary and ask them to recalculate the pension liabilities using the public sector mortality tables. So that was a little bit of a wrinkle in the audit process because that did take place during the audit. So that's one of the issues that we discussed with management. The other is, as I talked about, just the back and forth with relative to the fiduciary activity standard that was supposed to be implemented, and it was wrong, redone, delayed. So significant amount of time was spent working with management on that this year. Significant difficulties. I mean, we didn't encounter any difficulties that were the result of management or the result of us. There were delays that were the result of living in COVID-19 world. You know, we were, I would say, substantially complete with the audit by the time we all went into lockdown. But an audit process is one where the work gets done, it gets reviewed, edits get made, it goes to the next reviewer, edits get made, it goes to the next reviewer, edits get made. So, you know, once we got into the post-COVID-19 world, it was more complicated just by virtue of the fact that, you know, it's not like you walk down the hall and you go into Courtney's office and you ask a question and you get an answer and you go back and you fix it. It's you send an email, you know, Courtney responds, she's got to get the information, you know, she figures how to get her hands on it. She then emails it back to us. We get, you know, so everything just really slowed down dramatically as a result of the COVID-19 impact. So there is a separate letter that's included within the Uniform Grant Guidance Report that speaks to deficiencies that were identified as part of the audit process. So this is a byproduct of the work that was done in performing the single audit. One of the issues that we identified relates to the tracking of federally funded assets and developing internal controls over the monitoring and management of federally funded assets. So that effectively resulted in a finding that is being reported as part of the Uniform Grant Guidance Report. There were no issues with the numbers. So the use of the funds were absolutely appropriate. The recording was absolutely appropriate, but there are very specific additional procedures that the federal government requires for ongoing tracking of assets purchased with federal grant dollars. And so that's where we identified a reportable finding. And then there's also a reportable finding in that report that relates to a byproduct of this audit is something that's called the data collection form. So this is a form that gets filed with the federal government that summarizes the results of the audit. So in 2018, for the year ended December 31st, 2018, that report was not filed timely. And as I'm sure this committee is all aware, the treasurer left on December 31st of 2018, right before the start of the audit process in the middle of a system implementation. So as you're all aware, the 2018 report was substantially delayed. So therefore the filing was delayed. And that is, it's just, if the filing is delayed, it's an automatic finding. It's just, if the light's on, you have to write the finding. We will file timely this year, so that finding will go away. And I anticipate that on a go-forward basis, now that Mark is in place, the system implementation is substantially complete. With or without COVID-19, we've all sort of figured out how to work in this world now. So I do not anticipate on a go-forward basis that we will issue any later than March 31st. So I think we've had a rough couple of years with all of the transition and turnover and the system implementation and COVID-19. You couldn't throw many more curveballs than we've had to hit over the last couple of years. But I anticipate that we're over that hurdle and that these findings next year will not be repeated. There is at the outset, I indicated that there are certain responsibilities in the audit process that belong to us as auditors. There are also certain responsibilities as part of the audit process that belong to management. So management is responsible for preparing the financial statements in accordance with GAAP, developing and implementing effective internal controls, complying with laws and regulations, making us aware of everything we need to know in order to do our job effectively, providing us access to all information that we need in order to do our job. So the very last thing that we do before we issue the opinion is we ask management to memorialize those commitments in the form of a letter under their letterhead and signature that basically affirms their role and responsibilities as part of the audit process. So a copy of that letter is included for your consideration as Appendix A to the document. I've already talked about the uniform grant guidance. So it's an unmodified opinion. So we're not modifying the opinion at all. In our opinion, the authority complied in all material respects with all the laws and regulations relative to the administration and expenditure of federal grants. As I indicated, it does have the 3 findings that are reported. 2 of those findings are related. They're both the internal control over the monitoring and managing of the fixed assets. So our report is on internal controls over compliance and on compliance. So we're actually issuing an opinion on 2 different elements. So if you have a compliance finding, almost by definition, you have an internal control finding as well. So we have to write 2 findings, even though they both relate to the one single issue. So 2 of those findings relate to the one issue and the other is the late filing. And beyond that is information on how you can reach us with any questions, thoughts, comments, or concerns. And with that, I'll turn it back to the committee for any questions, thoughts, comments, or concerns you might have.
Thank you very much. Any of the board members have any questions, follow-up questions?
Mr. Chairman, Rob Munier, a Port Council member, is on the attendee side. I'm going to bring him over in case he's got any questions as well.
Thank you.
Rob, you're on if you've got any questions.
Jim, just a comment.
Thank you.
Dan and, Dan and his crew here, I thought it was a very thorough presentation, and I certainly appreciate your knowledge of the authority and being able to, pinpoint a lot of things that cause problems, unintentional and whatever, especially in this year of this pandemic. But I don't have any questions at all. I think it's, from what I read as of 4:30 this morning, ridiculous time to be reading your report. But in any event, I labored through it, and I didn't have any questions. I just, one word that caught me in the whole report was complicated. And, I looked at all the different facets and everything that you went through and have gone through here. I can tell you right now that I don't think I'd be cut out to be an accountant or an auditor. So thank you, Dan and team.
I will point out, Rob, that I had hair before the start of the audit.
The old bald man hair joke. Okay. Any other members have questions, comments? All right. Okay, a couple from me, and I also, Mr. Jones, you should have called me. We could have coffee together at 4:30. So I have a couple of questions. One is, Dan, in your discussion of internal controls, you mentioned that everything that you saw seemed to be appropriate, satisfactory, given the type of operation this is. Were there any issues that you noted in internal controls in general that you thought might be either problematic or need attention?
Yeah, so we have issued a separate management letter to the management team. And in there, we've identified a number of recommendations for improvement in best practices. So nothing that would be considered either a significant deficiency or a material weakness. Anything that would rise to that level, we would have to share with this committee. But these were just recommendations. So for example, if you take a look at the past adjustment schedule, one of the things on there is accounting for the amortization of bond premiums using the effective interest method as opposed to straight line. So our recommendation is you should use the effective interest method. It's more complicated, it takes more time. It doesn't result in any material issues to the financial statements, but it's a recommendation for best practice and improvement. So there's a few things like that we have shared separately with management.
Okay. Another question, you mentioned and discussed some items and adjustments. Many of them were over the $100,000 number. Is the size of those of concern, despite the fact that added up together, they're not of material issue, according to you?
No. If you take a look through those, what you'll find is some of those are just, they're recurring year-over-year type issues. So you take the reversing effect of the effective interest method year-over-year, and the net number is a little tiny number. The calculation of the pension liabilities, that's sort of actuarial speak, and there's all sorts of little things that go into that calculation. And so there's nothing in there that's a material lapse in the way we looked at it. It's just, for example, that mortality table. They should have used the industry-specific mortality table, but that industry-specific mortality table is new. So the actuary that was employed by the authority didn't know to go grab that actuarial table. So yeah, there's nothing in there that when we looked at it, I would say it's problematic. They're just recurring issues that effectively, if you look at it on a year-over-year basis, nets to nominal amounts.
All right. I promise only two more, but not lengthy. One is, you were talking about revenue recognition, essentially what I might call bad debt write-off. Are you comfortable with the policies that we have in terms of that?
Yeah, we are. And your allowance is actually, it's very low. It's always been very low. And I've served the authority for a number of years, and I know Bob has always sort of challenged me because we made him drive the reserve up
Okay.
out of a few years ago because we thought it would be more conservative. And every year when we do the testing, what we do is we go back and we check, was the prior year reserve appropriate for the amounts that ultimately got written off? And ultimately, Bob proved correct that we his allowance was appropriate and we had them over reserve. So it's back down to where it should be. So
All right. And then that's great. My final thing is I welcome the fact that you will be ready on March 31st, 2021 with our report next year. Thank you.
we are 100% focused on that as a goal. I think Catherine has
Catherine Wilson.
Yep.
Hi.
When you first opened your presentation, you described that the Steamship Authority is under, I don't know quite the right words, but a certain status by virtue of receiving federally.
Yes. Yeah.
Can you describe that again for me?
Yeah. So what happens when an organization receives federal grant money? The federal government doesn't let you get away with using their money and not being held accountable to it. So what happens if you receive and expend more than $750,000 in federal grant money in any given year, it triggers a requirement for what's called a single audit or a uniform grant guidance audit. It's the same thing, just different terms. And what it requires is, so when we audit our financial statements, we calculate materiality based on the financial statements as a whole. When you do a single audit, you have to calculate a separate materiality where you take the testing down to a much more granular level, and you use that in testing the grant itself to make sure that the authority has complied with all of the rules and regulations around the expenditure of that money. So the authority has been on a cycle, like sometimes it'll go 3 or 4 or 5 years in a row where there'll be a single audit. And then sometimes it'll be 3 or 4 or 5 years in a row where there's no single audit. So I think we've been out of cycle now I think we've had a single audit in the last 2 years. So this is the first time in 3 years that there's been enough federal grant activity to trigger a single audit.
So in essence, this is a more rigorous review?
Yes. Yeah.
Any
And
other
one
member?
last question. One last question. Are there issues over the past, say, 5 years that would help me put this report into some additional context? In other words, this is the first report I've ever reviewed.
Yeah. So what I can tell you is the authority has been very clean, very crisp for a long time. It's been very well run. The audit's been very well run. We were on time for a number of years in a row, and we really sort of got hit by a bus when the treasurer retired in the 12/31/18. 12/31/18. That really sort of set things off the rails a little bit, and it also happened to coincide with a system implementation, which is a major undertaking, no matter what size the organization. So management has been really getting battered for the better part of the last couple of years, trying to deal with all of this turnover, all of this conversion. Now COVID, it's been a very difficult couple of years for the finance team to get through this period. And I really feel like, Mark's doing a great job. The team has always been great, but there's only so many hours in a day, right? So I think the system implementation is nearly done at this point. The transition is pretty solid. So I really feel like we're back on great footing, assuming COVID-19 doesn't continue to beat us up too badly. We should be back on track.
Thank you.
Thank you. Any of the Port Council members or any of the other members have any further questions?
This is Rob Munier. I'm good. Thank you. Catherine really asked the question I was going to ask, and that's how we look relative to previous audits. So thank you.
Thanks, Rob. Okay, Mr. Davis, you want to take this from here?
Sure. I just want to thank Dan and Tanya and Matt and Chris for all their hard work. I mean, it's been as Dan pointed out, it's been a difficult issue to be dealing with the COVID on top of everything else. And I know the Mark, Courtney, Kelly have been trying to be as responsive as they could to any of the requests. So, you know, appreciate their consideration for, you know, their time constraints in terms of how documents were able to get back and forth to them. But again,
Thank you, everybody. I appreciate the time.
Thank you.
Thank you.
Thank you, team.
Thank you.
okay. So next item on the agenda then.
Yes, please.
Is to authorize the general manager to award contract number 10-2020, supply and deliver spare parts for two EMD 645 E6 diesel propulsion engines to the lowest eligible and responsible bidder, which will be Marine Systems, Inc. of Chesapeake, Virginia, for a total contract price of $366,659.44. So this past Tuesday, we opened up the bids. We had advertised this contract. We had issued only one company requested the proposal, the package, and we received one proposal from them. There's a limited number of suppliers of these parts and equipment, and generally on a regional basis. So we anticipated that. The contract came in at, as I said, $366,659. There's a core charge for that's included in that of $78,678, which will be credited back upon the return of that core if it's usable. So we anticipate at the end that this will actually end up being $287,980. The operating budget had a cost estimate of $347,000 for this. So this is to rebuild the engines on the motor vessel Martha's Vineyard. So we're seeking authorization from the board to allow the general manager to award contract number 10-2020, supply and deliver spare parts for two EMD it's a 710 diesel propulsion engines, but I think they're 645 E6 diesel engines. So I'll have to correct that. To the lowest eligible and responsible bidder, Marine Systems, Inc. of Chesapeake, Virginia, for a total contract price of $366,659.44.
Any of the board members have any questions, observations, comments?
Just one quick question here. This is specific to the Martha's Vineyard engines. This is not putting any of these on the shelf.
Correct. It's the plan, the repair schedule for the Martha's Vineyard. Their hours were coming up, so we plan on doing this in-house with our staff. So this is the parts and equipment they're going to need to be able to rebuild those engines.
Catherine?
When did we send our request out for the proposal?
Is issued on July 6th, and the bids opened on July 21st. So we had advertised it prior to the July 6th date.
And you're saying supplies are limited. So do you think that a longer period of, inquiry would have maybe yielded better results?
No, actually, in the past, this has kind of fallen out as to whether this is really a sole source or whether this is generally for this type of equipment, it's regional in terms of who supplies equipment for different types of engines in different areas of the country. So generally speaking, When we've issued these in the past, we've only gotten the one bid. Only one company's interest has been supplying it.
Thank you.
Any other questions? If not, management is recommending that we do this. Mark Abinson has put this in. Is there a motion?
I'll make a motion.
I'd second it.
There's a motion made and seconded. I assume the motion is to approve the proposal.
Yes.
Okay. Any further discussion?
going.
If not, it comes to a vote. All in favor? I'll need your name, please.
Jones, aye.
Wilson, I.
Randy, aye.
Malkin, aye. There you have it, Robert.
Thank you. And the next item we have is the staff is recommending that the members authorize the general manager to amend the lease agreement dated October 27, 2015 between the town of Falmouth and the Steamship Authority concerning the Woods Hole back parking lot. Back in 2015, it was we entered into a 5-year agreement with the town to lease the back parking lot. That lease expires at the end of this year. We met with the town officials in a COVID meeting, as a Zoom meeting, to discuss plans going forward. The proposal had been, let's do this for 1 year in light of everything going on, and we'll discuss it at again at a later time. So my understanding is that the town yesterday, that a select board voted on this and recommended approval as well. So we're recommending that the members vote to authorize the general manager to execute an amendment with the lease agreement dated October 27, 2015, entered into between the town of Falmouth and the authority concerning the Woods Hole back lot, which will extend the term of the lease to December 31st, 2021, without any other changes to the lease. So all of the conditions of the lease would remain enforced. So.
Okay, thank you. Any questions from the members? Motion? Is there a motion to approve this?
I'll make a motion to approve the extension on the lease.
Thank you, Catherine. Is there a second?
I'll second it.
Thank you. If no further discussion, it comes to a vote. All in favor?
Jones, aye.
Wilson, I.
Randy, aye.
Malkin, aye. Okay, we've got that. Do you have anything further for us today, Bob?
No, the only other thing I would like to mention is, Matt mentioned it during his presentation, is that we received word on Friday that the governor had signed the supplemental budget bill, and within that included the amendment in which any deficit that the authority would incur this year on the basis of the impacts of COVID-19 would not be assessed to the communities. The governor, the legislature, the Department of Executive Office of Administration and Finance for coming together and coming to alleviate the concerns of these communities. So it's much appreciated.
I absolutely agree, and I will tell you that these communities on the island, and I'm sure the rest of the communities that we represent, are very grateful as well. Only one other comment, Bob. I will be, since at 4:30 I didn't read all of the additional attachments that came from the auditors. Any questions that I have, I'll be getting back to you and Bob, pardon me, and Mark probably by the end of this week.
Okay.
So thank you for that.
Mr. Chairman,
Yeah,
just for one comment.
please.
Last week you had asked me to write a letter to the legislative delegation thanking them for their efforts. I'm presuming in wake of what happened on Friday, I can go ahead and include the governor on that letter as well.
I think that would be entirely appropriate, yes.
Okay, thank you. I'll get that draft out to the members this week.
Thank you. Anything further from any members of the board? Management?
All set.
Okay, this was a audit review. If there are any comments from the people who are participating that they wish to address to management, our barking dog will answer them. No, we'll take them now.
Mr. Salzberg has his hand up.
Why am I not surprised? Good day, Rich.
Hi, good morning. Actually, my question is directed towards the engine work that just got voted in. Just wondering if anyone from management could speak to what was done to those engines during the midlife overhaul at Senesco versus what's being done now to them.
So during the midlife refurbishment of the Martha's Vineyard, no work was done on those engines. Those were not part of that package. The overhauls are based on engine hours, and those engines weren't up for renewal at that time.
And just to follow up, did those engines take any damage from any of the blackouts that the vessel suffered?
No.
Okay, thank you.
Okay, is that it?
Yeah, I don't see any. I don't see any other hands.
Well, that's great. Well, thank you all for taking time on a muggy Tuesday morning, and try and stay cool. And I do appreciate management's time and effort in getting this across the goal line. So thank you very, very much, Mark and Bob and team. Appreciate it. And at this point, was that Mr. Rainey?
Yeah, I'd like to make a motion to adjourn.
I'll second.
I expect there's no discussion unless Catherine's waving her hand to discuss something. No.
No,
Okay. Motion's made and seconded. All in favor of adjourning, please?
Wilson, aye.
Jones, aye.
Randy, aye.
And Malcolm and I thank you all very much. 1 hour later, we're completed. Thank you very much.
Thank you.
Bye-bye.
Thank you.
Thanks, team.